Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. Rule 242, charts reflect real-time news. A lot of people get into the news and think that that gives them an edge. In this video, I'll show you how you get independent of the news and you can get literally real-time news from the charts. Let's run the numbers. If you're new, a very warm welcome and welcome back CTKS family. When we're talking about the news and getting real-time news, it's important to understand all prices are reflected in the charts. There's a lot of news that you will never ever know about, and there's some of course that you will know about because it will hit the mainstream media news. We saw in the past 24 hours that the Telegram founder Pavel Durov was arrested. Now, what did that do to TON and Notcoin? It absolutely hammered them. And by the time you got the news, you probably got the news around here and you've seen it just recover ever since. When people first get into financial markets, they're addicted to the news because they think the news is instantaneous and the news always comes out exactly at the time any price change occurs, and therefore they can have an edge. But actually, journalists know that it takes a lot of time to actually create a report and to investigate it and research it, which always means there's a big lag between the news hitting the market and the actual impact on price. And there's a lot more to this than meets the eye. When you look, for example, at TON and NOT, you can see as Bitcoin was coming down, because we know no alt can escape Bitcoin's gravity, as it bottomed out around here and started to come up, and yes, this is a real-time chart, you can see that actually there was a recovering in Notcoin and TON. But what would have happened if Bitcoin, for example, was continuing down here? They would continue down as well. There are a lot of rules in financial markets, and I want to share some really important ones with you today. Inside the masterclass, I talk about so many different rules. You need a lot of rules in order to be aware of how financial markets work. And rule 173 is quite important. You need to be independent from the news. Sacré-cœur, what are you talking about, Ken? How can you be independent of the news? When people first get into financial markets, they're literally addicted to the news. They can't wait to turn on the news and just analyze it. And guess what? The news will terrify you. The news is not for you, it's for advertisers. Therefore, if you want to make money, you need to be independent. Not only is the news for advertisers, it's always lagged. It takes time to get the news out. Even breaking news is not that breaking. It's quite old. And by the time the news has hit the stands, guess what? Smart money has already positioned themselves. The question is, how do we get like smart money? You can apply Rule 268. Look at CTKS structure determining price waves. I'm going to prove it out in real time in this video. There's a lot to know and understand when it comes to financial markets, and masterclass students, please refer to TM6. We'll look at it right now. Having gone through university and studying finance and been trading and investing in financial markets for nearly 4 decades, I'm in a position to share some really interesting insights into financial markets. One of the things that you want to look at is the relationship, particularly now, between the VIX and Bitcoin. Also the 10-year yield, and also the DXY when it comes to Bitcoin. And we're going to chat about these things pretty quickly. A lot of people mistakenly think that there's no relationship between the VIX and Bitcoin. Let me just invert this scale. Please let me know in the comments, do you see any relationship between Bitcoin, which is the blue line, and the VIX, which is from the past trading session? And what do you think will happen when the VIX starts to come down? Do you think Bitcoin will follow if the VIX starts to come down? This is the inverted VIX. What about the 10-year yield and Bitcoin? You notice this big drop off. And what about the DXY and Bitcoin? Let's invert these scales as well. What do you see here? Is there any relationship, directional correlation between inverse yields, inverse DXY, and inverse VIX? Please let me know in the comments. This is a really important part of your learning, to be an active learner. Unfortunately, it takes many years inside financial markets to understand there's a hierarchy of charts which will impact the price performance of your investments and your trades. Tier 1 charts are the engine of financial markets globally. You need to understand how these charts are moving because the Tier 2 and Tier 3 charts will get impacted. Not all charts are created equal. Some are very, very important. Inside the masterclass, we talk about positive and negative fresh air gaps. They are known in the general parlance as fair value gaps. And CTKS structure predicts fair value gaps, which is an incredible thing. I'm going to prove it out. Because when you know where a fair value gap is, you can make a lot of money. When we looked at the DXY, we saw the DXY absolutely melted, and the VIX melted and the 10-year yield melted as well. This was responsible for a big surge up in crypto, and Bitcoin, no alt can escape Bitcoin's gravity. Which simply meant as Bitcoin was coming up, all the alts absolutely partied. But could we have known about this fair value gap even before it didn't occur? And what caused this fair value gap? Well, it was a structural failure, but it is explained through the news. Major central banks are now aligned as Powell signals Fed rate cuts ahead. And what is a fair value gap? It's just a significant imbalance between buy and sell orders that cause these massive unexpected movements in price. And they can be negative fair value gaps or positive fair value gaps. Often we say that sharp angles do something. If you know, please let me know in the comments. That's one of the rules inside the masterclass, and it's a very important rule. Now, how could we know it was coming? Well, it's all about Level 1 and Level 2 standard certification in the CTKS method, but I'll put on the indicator that is derived from that analysis for the DXY, and it covers over 20,000 days worth of data. Let's pop it on. What it's going to show us is where the fair value gaps are. And you can see clearly there was a fair value gap in here. And look at all the structural support levels that were below. They caught the DXY. They couldn't rebound it just as yet. But these are gravitational levels. And this negative fair value gap could turn into a positive fair value gap if things reverse. But the real point of this exercise, if you were looking at the DXY at this particular point, you saw a structural failure, and a structural failure means that we're moving down to lower structural support levels. If we get a structural pass, we're moving up to higher structural levels. Structural failure to lower structural levels. In times of market volatility, it is incredibly important to know where your structure is, not just below, but also above. And that is exactly what this incredible system gives you. If you're liking the content so far, please smash that like button and a very warm welcome to you. And also, if you're new, you don't know about this guy. This is Borsog, the price eagle. Now, what is Borsog and why such a funny name? Bor is buy on red at structural levels, and Sog is sell on green at structural levels. That is Borsog, the price eagle, and he's always looking towards the right. We're always looking into the future. We know where the negative fair value gaps exist and the positive fair value gaps exist. We know how strong structural resistance levels are and how strong and where, more importantly, structural support levels are. In times of market volatility, if you do not know where structural levels are, you're in a world of hurt because you'll be at the mercy of the mainstream media news, and the mainstream media news just wants to drive you crazy. If you saw the film Nightcrawler with Jake Gyllenhaal, that was a really good film, and there was a particular comment inside that film about news. If it bleeds, it leads. So you're watching bleeding things if you turn into the news. You don't want to bleed, you just want knowledge, and the knowledge of the Tier 1, Tier 2, and Tier 3 structural levels will give you an incredible edge inside the market. I'm going to be sharing different levels. They're all from CTKSMethod.org. There's a trading view indicator that I'll be showing you. I use this trading view indicator myself. Inside financial markets, you're going to need a lot of rules, and Rule 225 is perhaps one of the most important. Bitcoin cannot escape the stock market's gravity. A lot of people think that the stock market has no correlation, no interdependence with the crypto market. They couldn't be further from the truth, but that's not to say they don't just believe that falsity. People can believe whatever they want to believe, but when you look at the charts, it's undeniable. But few people look at the charts, and even fewer understand how to look at the charts. That's my job, is to help you to understand the charts at a really deep level, and gravity is a critical thing that you'll need to learn. There is an undeniable association between the major market indices such as the S&P 500, the Nasdaq, the Russell, and the Dow, and also Bitcoin. And Bitcoin is that blue line. When the major market indices rally, typically Bitcoin has already started its ascent. When the major market indices get weak, we've often seen weakness inside of Bitcoin. This means that you must look at Bitcoin to understand where the major market indices could be going. Now, why is that important? Because a lot of people are invested in individual stocks, such as Apple or Tesla or Nvidia. For example, it doesn't matter what it is, but the major market indices are the things that will cause either, for example, Nvidia was not going up as the market tanked. Apple was not going up as the market tanked. This particular gravitational alignment plays out across all of the stock market. And when it comes to crypto, this gravitational alignment plays out across all of the alts. It's very normal for price to move in a wave-based function. It's always up and down, or it's down and then it's up and then it's down again and it's up again and it's retracing and it's rallying. Just get used to this. This is price. When it comes to the S&P 500, it's very important to know where the S&P 500 is going. It is the major index. It's a tier 1 chart, and you often see that Bitcoin is kind of like the canary in the coal mine. It is and shows real-time risk sensitivity. If the risk is on, which means that people are wanting to get into the market, Bitcoin will be coming up. If risk is off, you will see Bitcoin coming down. All the markets are intercorrelated and interconnected. As investors and traders, you need to understand where a specific chart is going. If you get a break across a level of resistance inside the S&P 500, you expect all the components. That's right, Nvidia, Microsoft, you name it. You expect them to come up. And you expect the exact opposite when you get a cut under a structural level. You expect it all to go down. You must know where the safety nets are and also the ceilings. And when we look at the level 1 and level 2 standard certification, we draw up across all of price history, 55,800 plus days worth. And now I'm going to pop on the indicator and show you where the S&P 500 can go. Remember how we looked at the DXY with its negative fair value gap or negative air? We're going to look into the S&P 500 now. And you know it's important because Bitcoin is flagging what the S&P 500 will do. All markets move together. Okay, let's pop on the indicator. Now what do we see? Ay caramba, so many levels of structural support build. This was one structural resistance. It's starting to retest and show some positive moves and momentum. But any movement below that 5630 level opens up a negative fair value gap and therefore a movement down to 5605 or 5604 would be on the cards. There's lighter structural support levels below. The heavier the line, the more strength it actually has. But what happens if we get above that 56.38? Where is price destined to go next? Well, look at that. That is damn impressive. If we get above that 56.55, we have a positive fair value gap all the way up to 57.17. That's pretty good news. Again, we can see and detect where the fair value gaps exist from a positive and negative dimension. Already, we can see into the future. And you can do this for any chart if you learn Level 1 and Level 2 standard certification. We remember that when it comes to the major market indices, Bitcoin shows real-time risk sensitivity. If Bitcoin is coming up, you can bet your bottom dollar that risk-on sentiment is entering the market or it's already there. And also, if it's supported by movements inside major market indices, that means that we expect follow-through. So many people are negative on the markets. All you need to do is trade and invest in structure. Let's have a look at the structure of the Nasdaq, and we can see that the Nasdaq closed out at 17,877. There's quite significant structural overhead resistance at 17,890. And we've got lighter structural resistance levels above, a negative fair value gap, so if the VIX starts to spike and the DXY does a bit of mean reversion, we could come down to this around 1773 level. We've got another area of structural support at 17,732. But what happens if things take off and we start grinding through all of these structural resistance levels? After all, they're really quite light. We can see that we're getting a positive fair value gap and fairly significant structural overhead resistance above that 18,141 level. And you can pick up this indicator from CTKSMethod.org if you would like to overlay it on your TradingView chart. If you're investing or trading inside the stock market, it's absolutely critical that you know where your structural levels are. And you need to know where the structural levels are even for crypto trading and investing, because no alt can escape the stock market's gravity. Because Bitcoin cannot escape it either. You'll need plenty of rules to trade and invest effectively in any financial market. But when it comes to crypto, Rule 45, no altcoin can escape Bitcoin's gravity. This is particularly important. If your alt is going up, in all probability, Bitcoin is going up as well, and vice versa. So you need to know where those positive fair value gaps exist and the negative fair value gaps exist. You need to know structural support and structural resistance levels, and you need to know how strong they are, and most importantly, where they are. When I say that no alt can escape Bitcoin's gravity, what I'm talking about is this blue line here. That is Bitcoin's price. And you can see, for example, in Ethereum, as Bitcoin came up, what was ETH doing? What was Binance Coin, BNB? What was Solana doing? What was XRP doing? What was Doge doing? What was ADA doing? And of course, what was the entire crypto market doing? It was coming up. And when it really bolted up, did we see Doge bolt up? Yes, we did. We saw Solana bolt up, but a little bit of a delay in there. We saw Binance Coin bolt up, and we've seen a little bit of a weakness. Is BNB sniffing out that the VIX could potentially go up? This is how we want to look at our price charts. We want to be aware that no alt can escape Bitcoin's gravity and then take advantage of that knowledge. Sometimes you get these lags inside of price, and they're very, very profitable if you can take advantage of them. And of course, you're not always in a position to do so, but at least if you know what to do, you'll be in a position sooner or later. Without an understanding of price structure, price movements can get very chaotic. It's almost like, what the heck is price doing? When we look at total crypto market cap, when we look at this variability at the current time, it's really hard to understand what is going on. But if we pop on the indicator, it's a completely different story. So let's do that now, and let's understand where the structural resistance level was. And you saw crypto just came up and tapped it and went, oh my goodness, I'm out of here. And it nearly tapped the structural support immediately below it. If you know where structure is, you're ahead of 95% of people. And really, that's where you need to be in the investing and trading game. So let's talk a little bit more about where we could expect price to go. We can see that we're at very good structural resistance and structural support. It's strong, which means that it's capturing this price at the current time. But what happens if we lose this structural support level? We've got a negative fair value gap and light support, and that means a movement down is on the cards. What about if we get above this structural resistance, confirm it, and start to move up? We've got a positive fair value gap here and then light structural resistance above. And when we look at what the futures are doing, all in all, it's a fairly positive time for the markets, but a lot of people will not think so. Things can and do change around very quickly inside financial markets. That's why you must look at your charts before you make a trading or investment decision. But we are definitely coming back to a level of structural support across the entire crypto market at the current time. Knowing where your fair value gaps are, both from a positive and negative standpoint, is incredibly important. If you don't know where they are, you're going to be whipsawed out of price continuously. You also need to know how total crypto market cap impacts Bitcoin's price action. I've been saying this for quite a while. You need to look at total crypto market cap and Bitcoin simultaneously. Let's turn on the structural levels for Bitcoin. What we're after here is an understanding of where price could go. You can see at that 65,102 level, there was structural overhead resistance. This meant as Bitcoin was approaching, total crypto market cap was also approaching that structural level. And that meant that we got a rejection from total and also Bitcoin. There was a structural support level that failed at 64,622. We can see that lower structural support levels at 63,351 exist and a little bit lower at 62,981. Also, we can note that there's a negative fair value gap just here on price. So if we come down, we're likely to overshoot that 63 level and just go to about 62,965. Unfortunately, a lot of people do not understand how financial markets work. Rule 448, your chart is moved by other charts. You can consider that the S&P 500, the Dow, the Nasdaq, the Russell 2000 all move Bitcoin, but Bitcoin is also moved by the VIX, the DXY, and the yields. So Bitcoin is responsible for moving your alts. If Bitcoin is moving, it's because a lot of other things have moved or are moving. So when people say, oh, Ken, just cover the levels of my favorite alt, say it's Solana. Well, absolutely, this is a really good thing to do, but you must be aware of the risk on or risk off sentiment that hits Bitcoin and therefore hits Solana as well. Solana cannot escape Bitcoin's gravity, and Bitcoin cannot escape the stock market's gravity. In other words, if you don't know the CTKS structure across the Tier 1, Tier 2, and Tier 3 charts, by the time you look at your chart to figure out what you're doing, you're just gambling. And the CTKS family is all about not gambling. Gambling has its place, but not when it comes to financial markets. Consistent profitability is the key focus. Therefore, when we look at the charts, we just know the news has already been embedded into those charts. We can move from fear into confidence. We can profit in any market condition, so long as we move from before into the after. Into the after means that we understand CTKS structure. It means that we understand the intercorrelation and interdependence between charts. We have a three-way strategy, always knowing price moves in a wave. We are not retail. We do not follow the crowd. We just don't care less about the noise and hype of the news. Why don't we care? Because it's all about positioning retail. Before is all about getting manipulated. After is all about getting into control. And we need to get onto the right side of the percentage. That's why we buy on red, which is very uncomfortable for people to do, and we sell on green until you know that price is the only reality. There's a lot of things to do, and we go in market long at spot. You can do your leverage trading for sure, but if you become a master of going long at spot, anything that you do from there on in will be a benefit and a blessing to you. All charts are intercorrelated and interconnected. If you were investing in Ethereum, you would look at this and say, oh, what news caused Ethereum to spike up and what news caused Ethereum to spike down? You don't need to worry about what news causes what. You need to look at the structural levels and the interdependence and intercorrelation between charts. Let's first look at structure. Understanding structure is a literal game changer. When you understand structure, you understand where the ceilings are and where the floors are in terms of the price that you're looking at. We can see that Ethereum was just recently rejected from a Borsog structural level. They're called CTKS levels or Stanfield levels of 27.91. We also saw that we had a 27.70 failure here. We moved quickly through a negative fresh air gap and we knew it was there because we know in advance where the fair value gaps are, either to the positive side or to the negative side. We've seen a lot of selling come into the crypto market. We've bypassed a few levels of structure. We're now heading down to the 27.36 level. Just remember, price is always moving in a wave. Just because it comes down like this doesn't mean it's not going up. Price is always moving up and down and up. Ethereum is currently trading at 27.50. A lot of people absolutely love Solana, so let's just pop on the indicator and talk to the levels of structure. We saw that we got above that 160 level, almost looked like we were confirming it to move higher, but we had a failure here because we had a lower high. This is a high and this is a high, but this high is lower than that high. So that's a lower high. We also see that we had a structural failure at the 160 mark. We hit structural support around that 158.50 and we just jumped up a little bit. We've got a negative fair value gap below down to around that 153 level, so just bear that in mind. We also have a positive fair value gap up to around that 166 level. Always remember the price is always moving in a wave. Just because it comes down doesn't mean it can't go up. But typically when people see price coming down, they just assume it's going to keep on going. Or price coming up, they just assume it's going to keep on going. It all depends on structure as well as intercorrelation and interdependence. Solana is currently 159.46. Inside the comments, what do you think Solana will do? Do you think it's going up or do you think it's going down in the next 24 hours? We'll revisit Solana in tomorrow's video. Understanding Rule 268, CTKS structure determines price waves. Those price waves that move up and down and up all over the place, they're all about hitting a structural resistance level and then backing off to lower structural support levels. Also, the interdependence between charts is incredibly important. That gives you risk on sentiment or risk off sentiment. If you were trading ADA, Cardano, you really need to know where the structural support and structural resistance levels are. Many people just look at recent indicative price. They don't look across the thousands and thousands of days worth of data. They just look across a couple of days of data and say, oh, this is all that's important. No, it's not all that's important. After being inside financial markets for nearly 4 decades, you must look backwards in order to go forwards. Let's turn on the structural indicator for ADA, and what we can see here is that 39.85 level of structural resistance was quite extreme. When you have a major confluence of structural resistance levels, it's going to be difficult for a particular chart to escape them. And how you read one structural level on one chart is how you read them all. For example, we saw a very good consolidation after a big push up, and generally we get that. But where did this push up stop? It stopped just below that 39 level, and around that 39.30 it just bottomed out, so to speak, topped out, and then it consolidated. As it made its way up, we knew already at this point of time that there was structural overhead resistance around that 39.90 mark, and as a result of that we knew that the upward price momentum would have to get over that level before we got any further and just rallied up. Because of these structural resistance levels and structural support levels, you can read where price is likely to go. If it can't get above, it's likely to go to the level below. If it can get over, it's likely to go to the next level, and it can get over that, likely to go to the next level. This is as simple as it gets. ADA is currently 38.70. Because you've made it this far, you're an absolutely awesome human being. You're investing in your knowledge, and therefore I'm going to share some really special things for you. When we saw this particular fractal, which was the C19 sell-off, we saw that we were in a particularly important point. We were either going to break up or break down. We've broken up. Now that's a fantastic thing. This is a case where a breakup is a really good thing. This is the kind of breakup we want. Many people saw this huge surge in Bitcoin and said, oh, it's going to the moon, it's going parabolic, it's going to be $3 million tomorrow. But the truth is that there is severe, extreme structural resistance from around that 65,000 up to around that 66,200 level. This is exactly why knowing where CTKS structure is incredibly important. If we can't get through this area, we're likely to come back and test this particular one. That structural area is between 60,614 up to 61,586. And you can see it's just basically here at that lower range. So getting a retest like this would be completely fine. What you find, often we have to consolidate gains, especially when we get big movements up. We got a big movement up and that consolidated for quite a while. We've had a cut over here. Things look really constructive. You often get volatility inside cutovers, so just be aware that it can just flip down and potentially retrace. So long as we get upwards momentum inside the major indices, everything is risk on. If the major indices start to fail, especially below structural levels, we'll have to rethink. But for the time being, it's risk on, with a potential for retracement. Joe D has very kindly offered a CTKS partial masterclass scholarship. Your name could go here if you're interested and dedicated to your knowledge and to your learning. If you want to be more of a financial blessing to yourself and those you love, you can apply for this partial masterclass scholarship. If you're interested, please reach out by email to me at ctksmethod@gmail.com, or you can reach out to me directly on Twitter/X. The description has my details. I'll be picking the awardee later this week, so please don't miss out if you're interested. And many thanks again to Joe. Inside financial markets, the journey into consistent profitability is one of CTKS structure. When you understand where the fair value gaps can exist, when you understand structural passes and structural failures, when you understand the intercorrelation and interdependence between charts, everything changes. Always remember, knowledge creates profit. In tomorrow's video, if you would like me to go through the structural levels of any of these charts, please let me know in the comments. And to let me know that you've made it up to this point, please just include something about CTKS structure. You can just literally pick from any one of these 32 charts. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.